Hi and welcome. I'm Wayne Martin with Real Estate One, and I'm here with my lovely wife.
Frederica Martin. Freddie is my nickname.
Yeah. So what we want to do today is go over the market overview. So it's February, middle of February of 2025, and we can just talk about what's happened in the last couple of years, where we're at today, and where we think things are going to go.
And this is strictly for Shasta County that we are talking about, not Trinity, Tehama, or Siskiyou County. This is strictly Shasta County.
Correct.
Yeah.
Correct. So, Freddie, what have we seen in the last couple of years since 2020?
Yeah, it's when the interest rates went down to 3% or less, then the values of properties shot up because people rushed out to buy. And we were doing a lot of business during that time, even though we were wearing masks and gloves and booties and all that kind of stuff.
Right.
But it did significantly raise the prices of the values of the homes in Shasta County.
So home prices basically rose almost 20% in that period.
Yeah.
Because interest rates were dropped. People went out, refinanced. A lot of people had loans that were 4%, 5%, and interest rates really dropped down to 3%, and in some instances to 2.5 on a 30-year fixed. So it really changed the dynamics of the market for where we're at today.
Right.
So after we got through that, interest rates rose.
Yes.
Right?
Yes. And that really stalled out the values and slowed down the market pretty significantly, because if you have a 2.75 loan, the chances of you selling your house and moving are pretty slim, because then you're going to buy something and it's going to be 6.5% to 7% interest.
Right.
Yeah. So that kind of, I think we went up like 2% each year in the last 2 years.
Right.
Yeah.
Depending upon where your home is located, I mean, there's a lot of different factors, but roughly about 2%. It actually probably went down in some areas and then up more in others, so roughly 2%.
And a huge part of that is fire insurance.
Right.
Yeah, because our area has a lot of rural properties that are in forested areas, and properties that have high fire insurance have been much more impacted than homes that are right in the community.
Yes.
Reading, yeah.
If you live on a green belt, even in the city limits,
true.
that can have a significant impact on fire insurance rates.
Yeah.
When you go to sell, people that come in to purchase, depending upon their track record with their homeowner's insurance, can have a large impact. For instance, we had a home that we were selling out off Placer.
Right.
And the value was around $700. $700.
And the purchasers, they had a lot of claims on their insurance, and so it was like off the charts for
$15,000 was their first quote.
Yeah, first quote. And then so those buyers didn't make it, and we had the next buyers, and because they had excellent credit and also no claims, and it came down to like about $4,000 a year. Right. So there's so many variables. There's a lot of variables.
There's a lot of variables. Now, at this point in time, we've had fires in Southern California, Los Angeles area, the Palisades, and Altadena.
Yeah, Altadena.
Yeah. And so what we're looking at, what the future holds for insurance rates is going to be increases. We just
got an increase on
just got an increase. And so our policy on our home was roughly
$900,
$950,
and
something
now
like that.
It's almost $1,400 now.
Right, it's almost $1,400. So
and
that
we
just
are
jumped.
right. Yeah, we are right downtown.
Right.
Yeah, there's no. Yeah, we're in a low fire area, but of course, probably
So everybody's having to bear the burden of the climate change, of just more fires, drier seasons.
Yeah.
For whatever reason, and the insurance companies have just taken such a big hit in their policies, they're having to come through. So it's just going to be interesting to see what happens in the future, how it's going to affect California property.
Right, exactly. And specifically Shasta County, because we do have a lot of people that live in the rural areas.
Correct.
Yeah. And so the other thing that goes on, I would say the most significant things are, of course, the interest rate, which has stayed high. And the prediction from the lenders that we talked to, they think it's probably going to stay around what it is right now. They were hoping that it would go down to around 6, but they're thinking it's going to be between 6.5 and 7. And that also depends on what your credit rating is and
a lot of different
things.
Down payment, credit rating.
Yeah. Per purchaser. It makes
purchaser.
a difference.
Yeah.
So the overall view is what we're trying to say is that Shasta County is still pretty much Steven, sellers and buyers are about even, but we're starting to see there's becoming a little bit more of a buyer's market.
Right.
Because we're starting to see more inventory. People have to sell for various reasons. And so that creates inventory, and that means that the buyers have more choices. And so the sellers are having to step up to that.
Right. And the other thing, depending upon where your property's at, the fire insurance can make a big difference on
huge.
value.
Yeah, it's huge.
But the good news about the greater Redding area where we work is people still want to come here.
Yeah, they do.
It's very affordable compared to other parts of the state.
Absolutely.
And there's good employment. There's been good employment, which we should talk about a little bit because we're getting a lot of questions about what's going to happen with all the federal layoffs, the holdup of grants. This particular area that we live in, there's a lot of funding of grants.
Yes.
A lot of employment is dependent upon grants.
Yeah.
And we have U.S. Forestry. We have federal workers up here.
Right.
When I chat GTP'd how many potential government jobs that we have up here, they basically think that there's around 15,000 people that work in government jobs.
Right. Which our population is around 100,000, so it's about 14% of the population.
Right.
Yeah. And we'll see how that all plays out. And the good news is that we are seeing an increase. Like we're having 2 hospitals are being built currently.
Right.
One by the tribe and one by Dignity Health, which will bring in employment.
Yes.
And we have the place out by the airport, Stillwater.
Right.
Yeah.
And so it's kind of interesting to see what's going to happen with their.
Yeah.
Amazon is doing due diligence from what we've heard.
But yeah, that's a rumor.
Well, it's more than a rumor.
Yeah, it's more.
It's a little bit more than a rumor.
Yeah.
So they're doing due diligence out there.
Mm-hmm.
Industrial Park seems to be really starting to pick up steam with manufacturers that should be coming in soon.
Yeah.
So that can create some good jobs. And then Bethel is increasing their size from 1,500 students to 3,000 students. So there's good potential here for employment.
Yes.
We'll just have to see how it all shakes out. It's a little bit too early to tell.
It is. Yeah, it's early in the year, and we'll see. But we feel like we're in a strong position because I talked to a realtor that sells actually all over California, and she said that the reason she started really focusing on Shasta County is because we had the most sales in California. I mean, the most movement in properties. So that was very, very, very encouraging. Because it is affordable. It's a beautiful place to live. It's gorgeous. And if people vacation here and they decide they're going to move from another area of California, but they want to, we have this happen all the time where it's an older family, the grandparents, and they have kids that live in Southern California or the Bay Area, and they have kids that live in Oregon and Redding or Seattle. They're they're in the middle, so they're just like, this is perfect for us, and then we can go fishing and play golf. We can do all the fun things we love to do.
So one of the questions that comes up constantly is because of the fires in Los Angeles. What do we think is going to happen to the marketplace? Are these people going to move to Redding?
That's a tough one.
That's a tough one. Unless
We're hoping.
unless we get some Gucci stores and Yves
That's-
Saint Laurent and,
Yeah,
and
that's.
some of that high-end stuff, we don't see the people from Palisades moving to Reading,
We might get Altadena because that's more like a Reading type area.
potentially.
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 And we'll just see. And it takes time because, the insurance companies are just overwhelmed. They have to be able to get the funds to the people so they can
Right.
purchase. Probably going to see a lot of them move out of California. That's kind of the prediction. And then if you have a job down there, you've got to stay.
You got to stay.
So we think that people that could possibly move to our area would be ones that can telecommute, ones that are retired or retiring.
Correct.
And they're just going to go, well, I can get my insurance money and come up here and buy a really beautiful home and live the good life here. So it's a little early for that. We're hoping that that will be the case.
Right.
And they will come up and purchase here.
So we'll just have to sit back and probably won't know anything for 3 to 6 months
Yeah.
if there's any impact
Yeah.
that's going to happen with those people moving into the area.
Because when we had the Paradise Fire, we got quite a few people that moved here because Chico was completely sold out.
Within a month.
Yeah,
it was totally
it was
sold out.
done.
And prices just went through the roof. They
Yeah.
jumped $100,000
Oh, yeah.
over what they were.
Yeah,
It
but
just
here in
scaled up.
Reading, they pretty much, even though we had the car fire, the prices they didn't jump too much. Not terrible.
Not terribly.
Yeah.
No.
Yeah, so we
But
did
they
see
did
that.
go up.
They
But
did go up.
They did go up from that. So.
And that's another thing, like Wayne talks about for the limited inventory we have here, is because when the car fire took out like 800 homes.
We lost 800 homes, and since then, that was 2018,
Yeah.
right?
Yes.
Only about 25% of the homes have rebuilt.
Right.
So that also affected, by losing that many homes, a number of those homes would have come on the market. And so
Right.
that inventory's been taken off the market, along with all the 3%ers that refinanced.
Right.
People just don't want to let go of their loans, so they're not going to move.
Yeah.
Unless they have to.
Unless they have to, which that's it. We're always going to have people that are moving and doing stuff.
Absolutely.
Yeah. Then
Absolutely.
so that's kind of just like the market right now. It's like this. Not sure. We have to wait and see how the fires in Southern California affect us. We pretty much figured these are going to be the interest rates because I can remember
for the next year.
For the next year, when I bought a home years ago, I got a 10% loan and thought I'd struck gold.
Yeah. So what's kind of interesting, if you look at
Yeah.
a 50-year average, the average rate was actually 8%.
8%. Yeah.
So
Yeah.
we feel blessed.
We feel,
that it's 6%.
We've seen it. But if
And
you
everybody
were
wants 3%, but unless the economy's really, really doing poorly,
right,
and they just flood the banks with money,
Yeah.
we're not going to see that, and we really don't want to see that.
No, we don't.
We need stability in the marketplace. With a new administration, there's a certain level of anxiety in the marketplace, which we think is affecting buyers. But that'll calm down,
It'll calm
hopefully.
down, yeah.
And the other thing that's happening with reshoring, moving away from China and a lot of the other countries where manufacturing has been happening that was cheaper, we're relocating a lot of the industry here, and it's going to create inflation. So that can affect interest rates and keep them up too.
right,
So
yeah,
we'll just have to see.
yeah.
But if you would like a monthly update on what's going on in the marketplace and break it down to your neighborhood, let us know. We have information. You can reach out to us either through our phone number or email that'll be posted in this video, and reach out to us, and we're more than happy to send that to you, and you'll be very knowledgeable about the market.
Yeah. We do it every single month. It keeps you on top of what's going on a monthly basis.
Absolutely.
Yeah.
And if you are thinking about selling, we do a free, no obligation value. We'll take a look at your property. We can figure out the value of your property, how long it would sell, and then the steps it would take to get it prepared to get your price, the greatest market price we can get for you, and the best terms. So if you're interested in that, give us a call, email us, let us know, and we'll be there for
great.
you.